Good day, everyone, and welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I'm the founder of 10x Digital Link, where everyone who has a knowledge gap in digital trading can get the right knowledge, get the right guidance, and also get the right tools to enable them trade the financial market profitably and in wealth. Okay, so today's market fundamental and technical breakdown is for the time period of 3rd of March to the 7th of March 2025. How this usually goes down is that we'll first of all talk about the technical charts, which has to do with the structure of the market, the price action of the market. And we'll be talking about different pairs like Euro USD, AUD USD, XAUSD, also known as gold, and Bitcoin. Okay, then we'll move over to the fundamental aspects of the market, which has to do with the macro news events that will be of liquidity and importance to the market during this time period. If this is your first time, you're welcome. Watch to the end. We are offering a lot of value and content and also information that is going to help you become a profitable trader. And if this is not your first time, thank you for returning. Don't forget to smash the like button, subscribe, and also share this content with your friends and family. So with that out of the way, I'll be jumping into my screen right now so that you can be able to see my charts. So over here on my screen, on the right-hand side, these are the pairs we'll be handling, okay, on the right-hand side. So right now it's EUR USD. So before we forecast, so our forecast for last week was for going to drop towards this demand level and then move up to what level. So high level and then drop demand level. And right now it is testing the demand level as a supply level, also aka a reoptimization zone. Okay, so with that out of the way, let us update this current graph. So over here is the analysis from monthly down to the 4 hours. Okay, so this was January and candle, a new kind of form, a new month of this month with January, and there are chances that March is going to also be what a bullish month. Okay, so on a monthly view, I can see that since the last 2 months were very bull, the previous month of February was a bullish one. At least this month of March would come and fill this week, the top week of March. Okay, of February. So that way, that's thought kind is going to be forming the three wise soldiers. Okay, the three wise men. Okay, if that is a bullish month for March. Okay, so on the weekly time frame, what we do is that we update the previous week high over here and the previous week low. The principle here is that if the market breaks above the previous week high, it goes higher. The market breaks below the previous week low, it goes lower. Sometimes the market can just go and grab liquidity from previous week low, creating a week before breaking above the previous week high, or vice versa. So something else to look at on the weekly time frame is chart pattern. So what chart pattern now is what an ascending triangle. An ascending triangle. This is what equals any candle that is going to be more of a retest to continue the push to the upside. So that's the principle I see for this particular chart pattern on weekly time frame. So we look for chart pattern on the weekly time frame. Then on the daily time frame, we spot the daily demand and daily supply zone. The daily demand and daily supply zone. So based on the daily demand zone I currently see, this is a daily demand zone. This last red candle over here is a daily demand zone over here. Okay. So this is daily demand zone I see over here. This is the daily demand zone. This last red candle over here is the daily, the broken. So the current daily supply zone I see this last blue candle over here. So I'll just place a line there to identify the days, okay? Then we move down to the 4 hours time frame. So on 4 hours time frame, we are going to spot out the daily, the 4 hours supply zone. This last blue hours is this red candle over here. This red candle over here. So and this is now a reoptimization zone, which is it has turned this demand into a supply zone, which is literally like this. The market will be towards and there's possible. Okay, so this is literally possible. And some move up towards move down. So these are the two possibilities I see for Euro USD. And hold on to this, but turn it into a reoptimization zone. Then the 4 hours demand zone should be around here, this red candle here. If I'm not mistaken. So and then over here. This seems to be demand zone. This kind of like everything here. Okay, so this is what I see for Euro USD. Our forecast for Euro USD is from the current level. Okay, since we have a bullish candle for February and March, this is the first trading day of March, so we cannot really determine what the trend is at the moment for March, if it's going to create a lower week before it starts creating a higher week, you understand? But we know that it's bullish for March. We know that the trend is bullish for on the weekly time frame as well. And then we just need market to come back to us at least and start pushing up, or the markets can push up to this. Okay, wait, let me identify this properly. Market is currently inside the area of push. So this is now the current, let's update the supply zone. This is now the current supply zone for USD over here. Over here. Okay, so this is what I see. So the market is currently inside the confirmation, so it can start selling from there downwards towards this daily demand zone, also the 4-hour demand zone over here. Okay, so from there now we're going to also have this market has been trending to the so this would be the correction for another what to either push it up to supply and drop or push it down to demand and then moves up. So we go to the next time, which is as for AUD USD. We had the demand come towards the machine up directly for AUD demand zone, disrespected gate. Then the market and then the market actually disrespected and went down. Okay, so we were actually wrong on this, but we were actually correct towards moving towards the demand zone, but we were wrong based on respecting demand zone to continue pushing to the upside. So with that out of the way now, let us. So on the monthly time frame, what do we look for? We look for the what? The candlestick pattern. So for the month of a bearish doji candle, which is what they are still having what indecision, bearish and bullish. Let's look at the past and see if we can actually spot such reaction before in the past. Okay. This is why I spot such reaction. The doji candle, bullish doji candle was a massive bullish month, okay, for August. This was in 2021, okay. So that is that could be possible. That could be, we could expect what a massive bullish candle for the month of what March. So with that out of the way, let's move to the next, and which is the weekly time frame. For weekly time frame, we mark out the previous week high. Why? Because we want whenever the market breaks lower, we know that we're going lower. If the market breaks the previous week high, we're going higher. If the market breaks the previous week low, we're going lower. Okay. Then what do we look for at on the weekly time frame? This weekly time frame, the chart pattern I currently see is a flag. Is a flag over here. Over here. But there has been a break. Like, and then this was a correction. Then is that there could be a retest this way, okay, for another drop. Okay. So that's what a continuation drop to the downside. So that pattern you like see is more like a flag, okay, and daily time frame. Daily time frame is what the daily demand and daily supply. So for the daily demand, this is the daily demand I currently see. This candle over here is the daily demand. This candle here, it's the last red candle over there. Okay, then for the daily supply, it is this candle I spot blue candle for the market had a massive drop. Okay, so I'm going to have to delete everything here. Delete this. Good. So we are supplying the daily demand and daily supply and trending to the upside drop. Okay. So let's for another drop. So with that said, let's go to the hours supply. Also, over here, this is the 4 hours demand, this red candle over here. So if I spot the whole candle here, so I'm currently starting the 4 hours demand and demand reversal. Okay. So then the 4 hours supply. The market has been very choppy. You see, the market has been very choppy. Okay, so this candle over here, which is going to be our supply zone. Okay. So this is what I see. That's our supply zone. Okay, good. So with that in mind now, we also have to do use the Fibonacci. Okay, we also have to use the Fibonacci in this case because what we're trying to see is what the retracement. Okay, towards the 50 and 62 Fibonacci retracement points. Okay, okay. So the 50 and 62 this way. Okay, so this is it. Then after that, you can expect what any other move. But based on what I can see for AUDUSD, due to it's currently at demand zone from here, we can still move for the week is to push to the upside. That's it for AUD USD. Okay, so that's what I see. Then the next on the list is from last week. So my forecast was here. I can remember over here. So I 3,000 what demand happened. Go sleep it side and it would easily continue dropping to the downside. So with that in mind, let us now move towards what first. So on the monthly time frame, what is for both to February? Okay, goodbye. Okay, so rally. Okay, so with that in mind, let's go down to the week before. Mark out the previous week high, which is this. If it goes higher, okay, if it breaks the previous week high, it goes higher. If it breaks the previous week low, we go lower. So that's just it primarily. So this is the previous week low. Then we look for the chart pattern. What chart pattern do I currently see on this weekly time frame? So the chart pattern I currently see is already clear. It is a break. There was a return to the upside, but this trend line has been broken from last week. Okay, still come to a bit up, push up a bit to then create that massive new all-time high for the month. Okay, but there needs to be a week. The month week, the lower part of the month week needs to be created first before they can create a high, which is the month's high. Okay, so that's literally what I see. So with this trend broken, so a retest of this ascending time frame. On the daily time frame, I see what the same play out. Okay, so this is what important to correct it for another drop. Okay, for gold. So that's what I see literally for gold. So let's put out the daily demand and daily supply zone. So it's this blue candle over here. This particular blue candle, this particular one. So, and for the daily demand zone, we spread it out far back. Okay. Although we have a secondary demand zone right now, the market's going to be fighting with, which is this one. Okay. That's the secondary demand zone. So then I have to delete this yellow one here. No, not the H4 one, yellow. Good. I have to delete it. It's not valid anymore. So the secondary demand zone the market is currently fighting with for good is this red candle way. Then the primary one we expect market to come towards this one. Okay. Then the supply zone is this. So with that in mind, let's go down to the 4 hours time frame. So on the 4 hours time frame, what can we see? We see a massive change of new high. We expect it to what? It then created a double bottom, and the possibility of under correction for under was drop to the downside. So this is what I see for gold. Okay, this is what I see for gold. So with that in mind, I see also a demand, the 4 hours demand zone over here. Let's put 4 hours. Then where is the supply zone? Okay, so the 4 hours I spotted a supply zone all the way up here. I spot the supply zone all the way up here. It's too far. But that's what I see. It's a supply zone. But it has not really fulfilled any efficiency here. This particular can here all the way up here. Then this is under our area transition zone, which market could easily respect and then continue the drop. Okay. Break and retest pattern. Okay. Then I also see a demand zone over here. I see some sort of demand zone over here, 4 hour demand zone. Okay. So, and if I am to draw it, it's meant to be like this. Okay, so with that in mind now, go towards the supply zone and drop, okay, for gold, okay, or the market could choose towards go deeper, okay, before they match it from this swing high, okay, to this swing low. Where could the banks literally be looking out for? So they could be looking out for this 50, 62, and the 76 Fibonacci retracement point, which falls within the daily supply zone, okay, which falls within daily supply zone. So literally, I also see a 4 hours supply zone there, which is this blue candle here. So if I'm to place it this way, possible. This transformation zone might hold it, okay. The same picture I see on Euro is the same picture I see on gold right now, okay. So that's what I see currently for gold, okay. So it could move massively to the upside, and before the drop happens, it could move massively to the upside before the drop happens. Then for Bitcoin, the last on the list, okay, there's a massive drop going on Bitcoin as I speak to you. So let's go to the monthly time frame first. So on the monthly time frame on Bitcoin, the month of February was a bearish month. It was a bearish month. And then the month of March has started off bullish already. There was a massive spike for the month of March. I can see there's a little correction going on like this. If you look at it, it's going on like this. Okay, but for what I can see an engulfing. So this is an engulfing candle. And after this engulfing candle, the engulfing candle match would also be was a bearish month because of that engulfing candle seen over there. Okay. But right now the market is creating a wick. It's creating the higher wick of the monthly candle to be able to continue to push the downside. So that's what I see for the Bitcoin monthly time frame. It could be a monthly bearish candle. Okay. So on the weekly time frame, we spotted the previous week high and the previous week low. So this is the previous week high and this is the previous week low. The low became so low like this because of the negative sentiment in the market about the Bybit hack and the other crypto scams that played out last week. Then over that, I can see a chart pattern. Which chart pattern it is more like a channel, a bullish channel. Aside from a bullish channel, no, what did I do? So aside from a bullish channel, I also see a chart pattern that plays out like this. Let me bring this line. Yes, this. So this is more like a chart pattern that plays out like this. So on the weekly time frame, I'm going to put it at the candles, okay? So not at the week, at the candles. It's meant to go like this. Okay. So this is forming like this is a descending triangle. It's a descending triangle. Good. So and the principal direction, then a bit lower. And to measure where it could go to, based on principles of trading, is to measure where it could go to, you have to measure the difference between the low and what the highest points of this candle movements. Okay. Then you place it at the candle that breaks. Then you place it at the candle that the region where the break happens. Okay. So if you place it where the region where the break happens, okay, or the candle that breaks it, so there's possibility of the market crashing towards $82,500 per Bitcoin, which it has done that to, it has done that already, but it could go lower. It could go lower. So that's what I see right now for BTC USDT. It will go lower. After this week, candle closes in 6 days, okay? So we could now place this at the accurate point where it closes. So we still anticipate what bullish pressure. So with that said, let me delete this. And sorry, bearish pressure on Bitcoin, not bullish, bearish pressure. Then on the daily time frame, we look for the daily demand and daily supply zone. On the daily time frame, we look for the daily demand and daily supply zone. This is the daily demand zone over here. This is the last red candle over here. This candle, this last red candle. Then we look for a daily supply over here, which is accurate. Then this does not imply anymore. Then I have to as well delete this. It does not imply anymore. It does not apply anymore. So good. So with that said, we also see there is a daily demand zone here. It's a daily demand zone. Okay. And that's what I see currently for the market. Then we go down to the 4 hours time frame. I have to delete. Okay, so literally on the 4 hours time frame, I can see there's a 4 hours demand zone over here. 4 hours demand zone over here. I'll delete this. Then this red candle over here, the 4 hours demand zone. Then for the 4 hours supply zone, I see it here in the past, this recommendation massive. And I spotted this far back. I was waiting for the market to come back to this. This is the restoration zone, exactly. This market for Bitcoin is that they could be what another demand level. Okay. So that's what I see currently for BTC. Okay. Continuation push and to drop down. As in come back to demand. Sorry, the supply zone before it drops down. Okay, so that's what I see currently for BTC USDT. And also if I am to track the current trend, but the trend is your friend, you track it, is it? So you see, so the trend is actually your friend. So you don't trade against the trend, you trade in line with the trend. So with that said, thank you. And if you want to get signals, you can just dive down to our link tree. The link tree is going to be on the description. Okay. On the link tree, you're going to get a link says linktree/TonyFX. On that link, when you click on it, it will show you first-hand information about digital asset opportunities from around the world offered to you by 10x Digital Link. Okay, you can visit our 10x Digital Link store. This is our 10x Digital Link store. On our 10x Digital Link store, you can get varieties of products like some free products of our how to make 6 figures in 6 months on Airbnb without owning a property. It has to do with real estate. And over here is how to become a passive income machine. Okay. And this has to do with trading, okay, trading with our artificial intelligence and our EA, and also using our VIP signals. You just use these signals and then you place them on your account and you'll be able to use them to earn some money. Then over here, if you want to subscribe for our VIP signal, you just afterwards click on this particular link here and to take you towards the seller payment system. You pay with Naira, pay with dollar, pay with pounds, wherever you are. So just give you the currency that suits you and the payment plan that's process that suits you, and you make your payments. Then you'll be added to our VIP group. In our VIP group, we have daily live sessions, London live session, where we analyze the market just the same way we are doing it right now. But on Monday, we do it generally. Okay, on Monday, we do it generally. Everybody can join. Everybody from East, West, North, and South can join. But on Tuesday down to Friday, it's only for the VIP, and we treat them like royalty. We not just analyze the market. We read a book together, a book for the week. We call out a signal, and as well, we assist them to place this trade on their accounts and manage these trades. We guide them and make sure that they achieve the success they desire. Over here now is for our course. If you want to learn our strategy, how we do the top-down analysis, how we read the candles, okay, how we then place these trades, okay, and develop the right profits or right mindset. This is where you come to pay and join the system, okay. This is 10x Digital educational course. We have 1 month, we have 3 months, we have 6 months, we have 1 year. You just go there, you pick the one that suits you, because from the 6 months down to 1 year, when you're done learning from us, we give you a quiz. You pass the quiz, we fund you $1,000 capital you can use to start trading. Okay, that's what you get from getting the 6 months or 1 year package. Then this is our book that gives you insights, Forex Mastery, a guide to trading success. I wrote this book. We'll be dropping more books on cryptocurrency We'll be dropping more books on the real estate. We'll be dropping more books on forex trading, the technical aspects. This has to do with just the fundamental aspect and also the theoretical aspect of forex trading. Okay, so expect that those books before the year runs out. The crypto book, the technical aspect of forex trading, and also our real estate book. So with that said, also over here, if you want to join our free services, you can see where we have our free educational services on YouTube. You can subscribe. Okay, just by you watching this video, you can subscribe on YouTube right now. Then you register with our broker HFM. These are recommended forex brokers. Second is XNET, crypto is Binance, and KuCoin. Then you can sign up for some tools, free tools, TradingView to analyze the market. That's what we use to analyze the market. CoinMarketCap to read the coins. If you're into our crypto education, to get funded, this is the company we're working with, StenTrade, to get you funded up to $50,000. Okay. Then this is our Telegram group. This is our Telegram. To join our Telegram group, you join there for Forex. This for our crypto. Okay. 10x Digital Link group. And this is our WhatsApp free group. Okay. For where you receive updates on a weekly basis. Okay. These are our TikTok page, our Facebook community, our Instagram page, Twitter, and LinkedIn. Wherever suits you. Okay. Just dive down there, follow us, and keep you updated. So with that said, let's now talk about the fundamental aspects of the market today. Okay, so for Monday, March 3rd, 2025, we have a manufacturing PMI for Europe. Okay, manufacturing PMI has to do with the increase in prices of products and services in the manufacturing sector. Okay, this has to do with Spain. So over here, analysts are saying that it will increase to 51.4. The previous was 50.9. If this happens, Euro should be strong this early morning by 9:15. This news is going to drop by 9:15. But if you see a figure lower than 51.4, it is bad for Euro. If you see a figure higher than 51.4, it is good for Euro. Then the unemployment rate has to do with those who are unemployed. Over here, analysts are saying it will reduce to 81%. The previous figure was 8.6%. Analysts are saying it will reduce to 8.1%. If you see a figure exactly 8.1%, it is good for Euro. If you see a figure higher than 8.1%, it is bad for Euro. Then the Swiss franc manufacturing PMI, the same with the Euro manufacturing PMI. That's the explanation implies a higher is good, a lower is bad. Then we have the Italy, France, Germany, Euro Central manufacturing PMI. I already explained what those are. Then the government budget, okay, the government budget, if there's an increase in government budget, it is good for Euro. If there is a decrease, it is bad for Euro. The previous was minus 7.2%. Analysts are saying to increase to minus 3.8%, which is positive, okay? There's an increase in productivity. So if we get a figure higher than minus 3.8%, it is good for Euro. If we get exactly minus 3.8%, it is good for Euro. But if we get a figure lower than minus 3.8%, it is bad for Euro. Then the full year GDP growth has to do with the full year of 2024, okay? Analysts are saying to be 0.5, which is bad. But if you see a figure higher than 0.5, it is good for Euro. If you see a figure lower than 0.5, it is bad for Euro, okay? Then the manufacturing PMI, I already explained that before. A higher is better, a lower is bad. The inflation rate by 11 a.m. London session for Euro Central. So inflation has to do with the increase in prices of products and services. So by level, if you see a figure higher than 2.3%, it is good for Euro. If you see a figure lower than 2.3%, it is bad for Euro. The same thing implies the CPI. If you see a figure higher than 127.4, it is good for Euro. If you see a figure lower than 127.4, it is bad for Euro. Then to wrap up the day in New York session, we have the global manufacturing PMI, the global manufacturing PMI for dollar as well, and manufacturing PMI. Everything implies here. Any figure we see that is higher than all these figures here, it is good for that currency. But we see a figure lower, it is bad for the currency. Then to dive in on Tuesday we have early in the morning Asian session, retail sales month over month for AUD. Over here, analysts are saying it is 0.3%. The previous figure is minus 0.1%. 0.3% is higher than this, which is good. The retail sales has to do with the total products and services sold by a retail store. Okay, so if you see a figure higher than 0.3% by 1:30 a.m. tomorrow, Tuesday, it is good for AUD. If you see a figure lower, it is bad for AUD. Then early in the morning, London session, we have consumer confidence for Japan. Okay, we have over here, analysts are saying it is 35.7. If you see a figure higher than 35.7, it is good for Japanese yen. If you see a figure lower than 35.7, it is bad for Japanese yen. Then also we have unemployment change for Euro as well. So an increase is good, while a decrease is bad. This has to do with those who have said that they are now employed instead of those who are saying that they are not employed. Okay, so over here, we have the global manufacturing PMI for Greece. Yes. Then a figure higher than 52.2, it is good for Euro. A figure lower than 52.2, it is bad for Euro. And we have the unemployment rate for Italy, Euro Central, and Greece. Okay. Any figure higher than 6.2% is bad. higher than 6.3% is bad, 9.4% is bad. But we see a figure lower than all these figures, it is good for Euro. Then to wrap up the day, Asian session, we have the global Austria service PMI. Also has to do with what? Manufacturing PMI, okay, or service PMI. Service is different from manufacturing. It has to do with the service sector. So we see a figure higher than 51.4, it is good for AUD. A lower figure is bad for AUD. Then on Wednesday, Asian session, we have the GDP, which has to do with growth. If we see a figure higher than 0.4, it is good for AUD. If we see a figure lower than 0.4, it is bad for AUD. Then over here, we have GDP year over year. This has to do with quarter over quarter, first quarter against second quarter, and then and so on and so forth. Then the next is the service PMI for Euro, Spain to be precise, okay? If you see a figure higher than 51.1, it is good for Euro. A figure lower, it is bad for Euro. The same thing applies for Italy, France, Germany service PMI, Euro Central, London service PMI. Everything here, we see a figure higher, it is good for those currencies. If you see a figure lower, it is bad. Then retail sales, I've already explained before with AUD. If you see a figure higher than 0.9%, it is good for Euro. If you see a figure lower than 0.9%, it is bad for Euro. So just notice that YOY means year over year. Last year, 2024 against this year, 2025, okay? And then month over month is last month against this month, okay? So that's how it works. Then the AUD has to do with employment change in the private sector in US, okay? So if you see a figure higher than 140K, it is good for dollar. But if you see a figure lower than 140K, it is bad for dollar. Then we have on the New York session as well, we have the global service PMI for Canada and also the US. A figure higher than 49.5 and 49.7 is good for CAD and dollar, but a figure lower, it is bad. The same thing implies with the service PMI. A figure higher than 53 is good for dollar, but a figure lower than 53, it is bad. Okay. Then on Thursday, Asian session, we have balance of trade. This has to do with total exports minus total imports. Okay, so if there is more export than import, it is a good trade surplus. If there is more import than export, it is a trade deficit. Okay, over here now they're saying that the Australian dollar is going to have 5.237 billion Australian trade surplus, which is good. If you see a figure higher than this figure, it is good for Australian dollar. If you see a figure lower than this figure, it is bad for Australian dollar. Then during London session on Thursday, we have the unemployment rate for Swiss franc, okay? If you see a figure lower than 3%, it is good for Swiss franc. If you see a figure higher than 3%, it is bad for Swiss franc. Then we have the retail sales year over year. I've already explained this before. It has to do with sales of goods and services by retail stores. So a higher figure than 1.9 is good for Euro. 0.1 it is good for Euro. Then deposit facility rate has to do with total deposits into the banking sector, okay? Also, this week on Thursday, we have the interest rate decision, okay? A cut of interest rate is going to make the euro to be weak, okay? So by 2:15 p.m., the New York session, you see a cut of this interest rate to 2.65%. It's going to make the euro to be weak. Then New York session as well, we have a balance of trade for CAD. A higher figure than 1.4 is good for CAD. A lower figure, it is bad for CAD. Then on Thursday, we have initial jobless claims. We have to do with those who have applied that they don't have jobs anymore and they're taking job insurance. So a higher figure is bad for dollar. A lower figure, it is good for dollar. The same thing with the jobless claims 4-week average and continuous jobless claims 4-week average. Then we have the Euro press conference before the PMI, the Producer Manufacturing Index of CAD. The higher figure is good for CAD. The lower figure, it is bad for CAD. So wrap up the week on Friday, we have employment changes. A higher figure than 0.1, it is good for Euro. A higher figure than 0.6, it is good for Euro. And then GDP, a higher figure than 0.1, it is good for Euro. Then during New York session, we have the employment changes, okay? A higher figure than 17.8 is good. Unemployment rate, a lower figure, it is good. Then the non-farm payroll, we'll be trading this live. So watch out for our link will be dropped on the group. Thank you so much. I wish you a profitable trading week. Don't forget to like, share, and subscribe.